What if I told you could receive millions of dollars tax-free, that you can give away money before the IRS even notices, all of which can benefit any number of family members and even friends? Well, in today's video, we're going to talk about just that. So stick around as we look this gift horse right in the mouth. Hey everyone, this is AJ, your ace in the hole, and welcome to the channel where we simplify personal finance and provide tips for young adults, parents, and others just starting out. And sometimes we help uncover some of the helpful parts of the IRS tax code. If you've ever thought that giving money to your kids, grandkids, or even friends would trigger taxes, hold tight. And this works both ways. This also applies to receiving money as well, thanks to the IRS gift tax. And this can be all accomplished completely tax-free, at least up to a point. But that point is massive. Today, I'm breaking down how all this works, the 2025 limits, upcoming changes that you need to know about, and some clever strategies people use to minimize taxes while transferring wealth. By the end of this video, you'll know exactly how much you can give away or receive every year, how lifetime exemptions work, and why most people never pay a dime in gift tax. So, let's jump right in. The gift tax was first introduced in 1924, repealed in 1926, and then reintroduced in 1932 during the Great Depression as a part of the Revenue Act of 1932 signed by President Herbert Hoover. Aside from significant tax increases across the board, Congress turned to both estate and gift taxes to help balance the budget. Gift tax rates were deliberately set lower than estate tax rates to encourage lifetime giving and accelerate tax revenue collection. In addition, the gift tax made sure the federal government collected estate taxes fairly. Without it, people would simply dodge estate taxes by transferring all their assets to their heirs right before death, and Uncle Sam would miss out. Now, I know you're probably wondering, why are gifts and inheritance taxed in the first place? And well, that's a good question. It does seem pretty crazy that just because a family member is gifted or inherits money, that they would be taxed on that exchange. But here we are. The good news is that there are tax exemptions to this, and they are quite generous, at least for now. Now, there are two limitations to consider with gift tax. The first is called the annual gift tax exclusion. For 2025, the limit is $19,000 per person per year. This means you can give $19,000 to as many people as you want, kids, grandkids, even friends, and it's totally gift tax free. The IRS typically increases this over time for inflation, with the most recent history shown here. Now, if you're married, you and your spouse can split gifts, appropriately called gift splitting. So together, you can give $38,000 per person per year. The second limitation is called the lifetime gift tax exemption. For 2025, this is a big number at $3.99 million per person. That's almost $28 million for married couples. The way this works is should you exceed the annual gift tax exclusion, for example, gifting more than $19,000 in 2025, you would subtract the excess from your lifetime exemption, reducing it accordingly. The only time you pay gift tax is when you've used up the lifetime exemption, and with such a high limit, well under 1% of Americans ever reach this. So, unless you're among the ultra-wealthy, you likely have no worries. I know I don't. Now, this limit wasn't permanent. In 2026, the lifetime exemption was sunsetting back from $14 million to $5 million, adjusted for inflation. However, the One Big Beautiful Bill Act passed in July 2025 permanently increased the federal lifetime gift and estate tax exemption to $15 million per person or $30 million for married couples, starting January 1st, 2026. As far as filing requirements are concerned, this is done using IRS Form 709, and while there are some unique situations that would require filing, such as gifts related to future interest or community property, these are more exceptional and are beyond the scope of this video. Basically, you're only required to file with the IRS if you exceed the annual exclusion for the year. But again, filing doesn't always mean paying taxes. For most, it's typically just tracking how much of your lifetime exemption you've used up. I provided links to both the IRS Form 709 as well as filing instructions below for reference. One important note, the donor is the only one responsible for reporting gifts to the IRS and not the recipient. Now, let's take a look at a couple of examples of how this might be used in practice. Let's say you gift a close family member $15,000 in 2025. Since this is under the current $19,000 annual gift tax exclusion, there's nothing to report. Now let's assume a grandparent gifts a grandchild $30,000. In this case, the first $19,000 is excluded, but the extra $11,000 gets reported on Form 709, but still no tax bill. They've simply used up $11,000 of their $13.99 million lifetime exemption. And finally, a married couple with 3 kids could give $114,000 total in 2025. That's $38,000 each child or $19,000 from each parent, not only avoiding any gift tax reporting in 2025, but also without touching their lifetime exemption. That said, some gifts are always exempt, no matter the amount. These are gifts between spouses, assuming they are a U.S. citizen, gifts to charities, and payments for tuition or medical bills. However, these must be paid directly to the provider to not be considered a part of gift tax guidelines. Another example, and one of the most creative uses, is called the 529 Plan Superfunding, which intersects gift tax rules and education savings. The IRS allows a special election for 529 college savings plans, which is that you can front load up to 5 years worth of annual exclusions into the plan all at once, meaning 5 times the $19,000 annual gift tax exclusion, or $95,000, could be gifted as a lump sum into an individual's 529 savings plan, the entire amount counting as though it were evenly spread over 5 years. So no gift tax would apply beyond Form 709 disclosure, and it doesn't eat into the lifetime exemption either, unless exceeding the 5-year spread. Now, if you're unfamiliar with 529 plans, check out my video here to understand how those work, as they can be a great tool when used in conjunction with the gift tax. Another use of the gift tax is around estate planning. Now, why does this matter? Well, every dollar you gift during your lifetime reduces what's left in your estate. That means fewer estate taxes when you die. Smart gifting strategies are one of the best tools families can use to preserve wealth across generations. Now, while most never reach the estate tax lifetime exemption, as I stated earlier, the strategy does help by gifting money or property that would otherwise recognize some level of estate taxation, such as state inheritance taxes, that can instead be moved over tax-free if utilized in gift tax strategies. Now, while on the topic of estate planning, there are other special considerations where you might reconsider using the gift tax. Let's say, for example, you choose to gift your child shares of a company stock that you originally purchased at a cost basis of $1,000, but now has appreciated to $5,000. Using the gift tax guidelines, your child is still accountable for capital gains taxes on the $4,000 growth if selling the stock at the time of transfer. However, if the child simply inherited these shares upon your passing, your child then receives the shares at what's called a step-up in basis, meaning it's received at the $5,000 value, requiring no capital gains tax on the $4,000 if selling the stock at that point. In this case, it would be better to simply inherit this asset versus gifting while still alive. So here's the bottom line. While the gift tax is indeed just another way for the IRS to collect on taxes, it really is less about taking your money and more about tracking large transfers. With the annual exclusion, the lifetime exemption, and strategies like 529 superfunding, most people never actually pay a dime of gift tax. And with the recent changes, the lifetime exemption seems locked for now. However, tax code can always be changed. So if you're considering any exceptionally large gifts or just want to build a smart estate plan, it's worth talking to a tax professional or estate attorney for effective tax planning. So that said, I really hope you found this overview of the gift tax helpful. And if so, please share this video, especially with any family or friends that might also find it useful. Also, be sure to like and subscribe to the channel so you don't miss out on future topics. And as a reminder, check out my video on 529 savings plans here that might help even further. And I hope to see you back here for the next one. This is AJ, your ace in the hole. See ya.